Recording in progress.
Okay, so because of time, we have to start now. It's 5:05 already. Good evening once again, everyone. I want to welcome you to our next episode of the public training organized by KCP Academy. The topic we'll be looking at today is value-added tax, VAT, planning, compliance, and audit. We promise this will be very interesting as our previous episode have been. Let's kick off. I'm privileged to be the managing consultant of KCP, so I'll be anchoring this section. I hereby solicit for your cooperation. Make sure that your mic is well muted to avoid distractions as other people listen. It is usual for us to always put forward this disclaimer. The essence of this section is just for general information and enlightenment purpose. Should you want to make any business decision from the content of this training, make sure you reach out to us so that we could look at the peculiar circumstance around your issues very well. We will not be responsible for any liability that may arise or loss that may arise from wrong applications of the content of this session. All right, so let's start. Let's start with the teaser as our custom is. Please confirm if you can see my screen. Confirm on the chat room if you can see my screen. Just indicate yes if you can see my screen. Okay. Who else can see my screen? Please confirm. Okay, good. So we are good to go then. All right, so the first question says, dash is a multi-stage consumption tax levied on the difference between a firm's sales and the value of its purchased input used in producing goods. Who has an answer to that? We have an answer to that. Can you confirm on the chat room? Okay, Michael is of the opinion that it is VAT. Who else?
I know you.
Grace, please mute your mic. Grace, mute your mic, please. Okay, Carlo is of the view that it is VAT. VAT. Okay, good. Let's look at the second one. The current tax law on the taxation of consumption tax in Nigeria is the dash. What is the current tax law on the taxation of consumption tax in Nigeria? What is the name of the law on the taxation of consumption tax in Nigeria? Can you indicate your response on the chat room? Okay, Michael is of the view that it is Value Added Tax Act and the Finance Act 2020. Can I have the view of others?
008. So scoring input VAT.
As a response to that. The current tax law on the taxation of consumption tax in Nigeria is that. David, please mute your mic. Okay, so the third one is the supplies of goods and services that attract VAT at 0% are called dash. The supplies of goods and services that attract VAT at 0% are called dash. Okay, zero rated. Okay, that's a good one. The next one is VAT charge. Okay, VAT charge on sales of goods and services are called dash. VAT charge on sales of goods and services are called dash. Okay, output VAT. Okay. Then the last one. VAT incurred all hear me now? Hello? No, today is waiting. Hello, can you hear me, please? Please indicate on the chat room if you can hear me. Okay, good. All right, so I'm so sorry today, I don't know what happened to the network, it's not been stable. So without wasting much time, let's quickly take the last one, then we move on. VAT incurred on purchase of PPE or purchase of goods acquired solely for resale is called what? Okay, input VAT. Okay. All right, so the following content we'll be looking at today. Please listen attentively. We try as much as possible to cover up for the time lost. We'll be looking at principles of VAT, statutory provisions for VAT administration in Nigeria, definition of key terminologies, applicable VAT rates, recoverable input, VAT, collection and accounting for VAT, registration and deregistration for VAT purpose, special requirements for oil and gas companies, MDAs, and non-resident company. Offense and penalties, how will that be treated? What are the activities that constitute an offense and what are the penalties as contained in the relevant law? Then we have a couple of audit teasers to test the level at which you understood what we must have considered thus far. Then what is now the technique or the strategy for tax planning, compliance, and readiness for audit? It is expected that at the end of this section, everyone should have been able to understand the concept of VAT, the key terms relating to VAT administration in Nigeria, understand the legal basis for the charge and collection of VAT, determine the VAT implications of common business transactions, prepare monthly VAT returns, conduct simple VAT planning to discourage avoidable fines and penalties that is accruable on non-compliance. Then discuss contemporary issues with the Nigerian VAT, drive compliance and represent taxpayer during VAT audit. Every day in the business space, we carry out various transactions, sometimes in respect of what we buy, sometimes in respect of the services we render, what we sell, sometimes we also make investments or acquiring equity or settlement of debt. All of these transactions has tax implication. But today we are not looking at the holistic or all the tax implications together. In some of our previous sections, we've considered the income tax implication on some of the transactions or operations of a company. But today we are limiting the scope of this training to transaction taxes. And among all the transaction taxes, we are looking in specific VAT. So there is a tax implication, tax implication for all that we carry out. Sometimes we are paying a tax with the transaction, and sometimes we are collecting the tax as agents of the government. It is important for us to note that VAT is a multi-stage consumption tax. Why do we say so? It appears on every stages of the distribution, goods and services distribution trail, right? So that is why we coin an explanation or definition of VAT as VAT is a multi-stage consumption tax levied on difference between a firm's sales and the value of the purchase inputs used in producing the goods or rendering the service. This is as given by Oliver Odman. It is also important to stress that VAT is an indirect tax. Why do we say so? It is indirect because it is not directly borne by the actual person that sells the goods or acquire the inputs. Rather, it is a form of tax that is transferred to the final consumer of the goods or beneficiaries of the service. So it is good for us to express VAT as an indirect tax on the domestic consumption of goods and services, except those that are zero rated or are otherwise exempt, such as exports. We'll be doing a lot of explanation around this later on. What are zero rated goods and what are VAT exempt goods or services? Primarily, the logic of VAT administration in Nigeria is known as a consumption principle. What we meant by that is that it is the location of whoever that is consuming or benefiting from the service that actually bears the tax burden. The tax in this instance is VAT. And I want to put a typical example forward. Please, everyone listening to this, if you have Mr. A in Nigeria who requires the service of a lawyer based in Ghana, let's assume the lawyer is Mr. John. If Mr. John renders service to Mr. A in Nigeria, which of the tax authority will has a right to tax or expect the collection of VAT? If you understand what the illustration I've printed, can you provide the response on the chat room? Who will charge the VAT? Or who has the tax collecting right on that transaction? Mr. A is in Nigeria, who has virtually approached Mr. John based in Ghana, who rendered legal services to Mr. A. The first question is that, is legal service vatable? If it is vatable, who has a taxing right? Who is to collect the VAT? Is it the Ghana tax authority or the Nigerian tax authority? Can you provide a response on the chat room? Yes, it is vatable, but who will collect the VAT? Is it the Nigerian tax authority or the Ghana tax authority? Okay, Michael says it's a legal service. Legal service is vatable, but Nigerian tax authority. Okay. Grace is of the opinion too that it's the Nigerian tax authority. Okay. So why do we then say it is the Nigerian tax authority? The thinking behind that is that VAT administration across the world, particularly in Nigeria, is established under what we call consumption principle. So it is the tax authority in the country of residence of the beneficiary or the consumer of the goods or service. So in that illustration, it is the Nigerian tax authority that has the right to collect the VAT. We'll be talking about that much more later on. That comes in under what we call an imported service. So hence, it is the final consumer of the goods or services that bears the VAT tax burden. It is also important to stress that VAT is charged on supply of taxable goods and services. The Act actually dwells much more by defining what a supply of taxable goods or service is. We'll be talking about that much more later on. Except where items are specifically exempt or zero rated. So other than instances where zero rated goods are supplied or zero rated services are supplied, or exempt goods are supplied or exempt services are supplied. Anything outside that, VAT must accrue on supply of taxable goods and service. The current law guiding the taxation of VAT in Nigeria is the Value Added Tax Act, V1. The very first one was issued in 1993, and there have been several amendments to it as the year passes by. There was an amendment in 2004. There was another one in 2007, but the most recent one made on this act was as contained in the Finance Act 2019 and that of 2020. So as we continue with this session too, we'll be looking at what are those cogent changes or amendment has been made to the VAT Act via the Finance Act. VAT, as we have earlier established, is an indirect tax on consumption. So it is particularly on every goods and services that are as contained in the Value Added Tax Act to be VATable. So still on the principle of VAT, based on the value of goods and services supplied, VAT is due on the value of goods and services supplied. So we, at every point in time, before we ascertain what the VAT due is, we need to be able to know what is the value of the goods that have been supplied or the services that have been supplied. Burden of VAT is usually falls on the end consumer, though at every stage of the goods and services distribution channel, the VAT is collectible at each stage of the distribution channel, but the final burden is transferred to the final consumer. VAT is also paid or payable to the federal government through the FIRS by all VATable persons. So it is also very important to stress it here that state internal revenue service are not the collector of VAT. Rather, it is collectible by the FIRS. And whatsoever the FIRS has collected on behalf of the federal government is expected to be shared among the three tiers of government. That is the federal government, the state government, and the local government. Now, how then do we account for VAT? For the purpose of the provisions of the Act as practiced in Nigeria, VAT is accounted for via output and input credit system. What is an input? We'll be talking about that much more. And what is an output? And it is also important to stress here that VAT should be a wash-through test. What we mean by that is that every collector at every stage of the distribution channel where VAT is suffered, it must be recovered when that good is transferred from that stage to the subsequent stage until it gets to the final consumer. So from this stage on, please, I need you to be very, very attentive. The statutory provisions on VAT in Nigeria. What are the various statutory provisions of VAT in Nigeria? When we talk about VAT in Nigeria, a lot of us know that before 2020 February, VAT rate was 5%. But after then, with effect from February 2020, it becomes 7.5%. Why? Where was this idea derived from? So that is what we coin as statutory provisions. They are legal provisions as enacted by the relevant arm of the government. So the following are the statutory provisions that regulate the administration of VAT in Nigeria. The first of them is the Value Added Tax Act. It was primarily introduced in 1993, but there have been several amendments after that. There was in 2004, there was another one in 2007, and also in 2019 through the Finance Act, as well as in 2020. So we should also recognize that Finance Acts of any year under review also constitute part of the statutory provisions where regulations for the administration of VAT can be deduced from. Then, of course, we could have decided cases by the competent courts in Nigeria. All of these serve as guidance on the administration of VAT in Nigeria. What then is input VAT? Now we are gradually moving into the main content of this section. What do we call input VAT? Input VAT refers to the tax paid on the purchase of goods and services from a registered person. Who is a registered person? A registered person is not just an individual, rather is every business entity that has been, first of all, incorporated or registered with the CAC in Nigeria. Two, has gone ahead to register with the FIRS, Federal Inland Revenue Service, and obtained a tax identification number. If you are just an individual and you suffered a tax called VAT on what you have bought, it is not taken as the input tax, but rather it is a final tax, and there is no how you can recover that, right? But it is an input tax to registered person, which could be enterprise, partnerships, or even incorporated entity, who have acquired certain goods, either to be recognized in their book as an asset or to be used in the production of other goods or for resale, right? So we will be looking at how input VAT will be treated when it is incurred on PPE, We'll also look at it when, what will be the treatment when it is incurred on raw materials that are used for the production of other goods. Or we'll also look at it when it is incurred in the manufacturing process, as well as when it was just a service incurred as an overhead cost in the course of administering the affairs of a company. Input VAT could also be the tax paid by a registered person on importation of goods and services. So like the instance or scenario we painted earlier on, where Mr. A patronized a legal professional from Ghana, that is an example of an imported service. So VAT incurred in that area or in that manner, how will it be treated? We'll be looking at that. Please, I want to be sure that we are all together. Can you confirm on the chat room if you are with me? Just say yes if you're with me. Okay, so we can go on. That's a good one. So the next term we'll be looking at is output VAT. We have earlier explained that the VAT you incur when you buy goods you want to resell, or when you buy or purchase raw material that you want to use to produce other goods, or when you import certain goods for resale in Nigeria, is said to be input VAT. What then is output VAT? Output VAT refers to tax which is due on taxable supplies. For example, the output of a business. If I am in business of selling laptops, and whenever I sell any laptop, right, I charge VAT, which is expected to be borne by whoever buying the laptop from me. What type of tax do I accrue? It is called output VAT. So the simplest way to identify this is that cost or tax we incur, consumption tax we incur on what we buy, right, is called input. But consumption tax on what we accrue on what we sell is called output VAT. Output VAT is also subject to certain exemption, or VAT generally is subject to certain exemption. Businesses are able to recover input VAT paid from output tax payable, right? What we mean by that is that certain provisions of the VAT, Value Added Tax Act, provides instances where businesses can actually recoup input tax that they have incurred in the course of the business processes. We'll be expounding on that much more as we go on. So the next one is, what are zero-rated goods or services? Zero-rated goods or services are those goods or services that the substantive VAT rate is 0%. It's not as though you don't charge VAT at all. You charge VAT, but the VAT is charged at 0%. All the categories of goods and services that falls into this class of goods and services are regarded as zero-rated goods and services. It is different from exempt goods and services. In exempt goods and services, you are not charging any VAT at all. But in zero-rated, you charge VAT, but at 0%. Now, I have a question. How could one claim input VAT suffered on zero-rated goods? How could one claim input VAT since we already established that input VAT since we have earlier established that input VAT are the VAT you incur when you buy goods that either you have imported or you have acquired locally for resale. If it now happens that what the set of goods and services you have incurred input VAT on are then subsequently classified as zero-rated, how then could you recoup or claim the input VAT? Can you provide your response on the chat room if you have an idea? Do you have an idea of how to claim input VAT suffered on zero-rated goods? I'm sure everybody understands what zero-rated goods are and what input VAT are, as well as output VAT. Okay, Grace is of the view that input VAT suffered on zero-rated goods should be expensed. Who has a contrary view? Okay, Adeni wants us to explain much more what zero-rated goods are. Okay, so by explanation, the law, particularly first schedule and part 3 of the Value Added Tax Act, provide that certain categories of goods and services are regarded as zero-rated. And when they say they are zero-rated, what we mean is that you incur VAT on them, but the VAT is calculated at 0%. It is different from exempt goods and services. Exempt goods and services, you are not charging them. Okay, so depending on plays out, whenever you have zero-rated goods, usually the government will not give you credit for it. So the best way for you to claim it is to expense it in your book. So if you have a category of goods that are classified as zero-rated, but you have earlier incurred input VAT on it, so you have to altogether cumulate it as part of the cost of that goods, and as a result, you are expensing it. It is important we stress here that with the amendment to the VAT Act, the following have been accorded the status of zero-rated items. As contained in the Value Added Tax Act, the following items have been accorded the status quo of zero-rated items. Number one of them is non-oil export. Non-oil export. Anytime, irrespective of the nature of the goods, the moment you are exporting it, meaning that you are selling it out of the country to any other country other than Nigeria, the VAT rate that you will apply on it is zero-rated. Why do you think the government allows this? They allow that because they expect that they want to create a favorable platform whereby goods exported from Nigeria can compete favorably with its counterpart in the home country where it is being exported to. So all categories of exported goods are not necessarily VAT exempt, rather the VAT accruable on them is at 0%. So we call them zero rated items. The second one is goods and services purchased by diplomats. Goods and services purchased by diplomats. Who are diplomats? Diplomats are representatives of other countries in a particular country. So the delegates of any other country represented in the embassies of various countries represented in Nigeria are called diplomats. So when you render goods, when you sell goods to them or you render services to them, the VAT accruable on these are regarded as zero rated because it is calculated as 0%. Then the third category of these is goods purchased for use in humanitarian donor funded projects. So these are establishments like UNICEF, WHO. If any of these entities or NGOs, when you sell goods to them or you render services to them, the accruable VAT on it must be estimated at 0%. I believe that is understood. So for more information about this, you can confirm these as contained in Part 3 of the first schedule of the Value Added Tax Act of 2007 as amended. Then the next category of goods we shall look at is exempt or exempted goods and services. What are exempt goods and what are exempt services? These are goods that are expressly not liable to VAT as contained in Section 3 and outlined in the first schedule, Part 1 and 2 of the Value Added Tax Act as amended. Please, I want to reiterate this again. The first categories of goods we have are VATable goods that suffers output VAT. The second categories of goods we have are zero-rated goods and services. Then the third category we have is exempt goods and services. In the output VAT, these are goods and services other than what has been contained in the first schedule of the Value Added Tax Act. Any categories of goods and services that are not as contained in the first schedule of the Value Added Tax Act are classified as VATable goods and they suffer VAT at the prevailing tax rate. Before February 2020, the substantive VAT rate was 5%. That is as contained in Section 4 of the Value Added Tax Act. Then the next categories of goods are called the zero rated. This one, it does not mean they don't suffer VAT, but the VAT is calculated at 0%. So this is contained in the Part 3 of the first schedule of the Value Added Tax Act. Then the third one is the exempt goods and services. These are goods and services that are not liable to VAT at all. And they are as contained in Section 3 of the Value Added Tax Act, and they are detailed in Part 1 and 2 of the first schedule of the Value Added Tax Act. So as a professional, it is important that you have a good understanding of the various statutory provisions that regulate the type of tax you are looking at. So I will encourage you that you don't just limit the knowledge you acquire in the course of this section to this. try as much as possible to familiarize yourself with the relevant provisions of the tax law that address the tax you're looking at. The more you get familiar with it, the more you can recap them offhand. Then some goods and services are expressly exempt, just as we have explained earlier, from VAT, and examples of them are as follows. All exports, right? They are VAT exempt. Then plant and equipment for utilization of gas in the downstream. So when operators in the downstream acquires any plant and equipment for the purpose of utilizing gas, it is VAT exempt, meaning that no VAT will be calculated at all. So when you are filing VAT returns in this regard, it has to be a nil return. Then the next one is equipment for agricultural purpose. So whenever you are acquiring or selling equipment for agricultural purpose, be it tractor or any vessels used for agricultural purpose, they are VAT exempt. Then other ones in terms of goods is still medical or pharmaceutical products. All medical or pharmaceutical products are VAT exempt, right? Please take note of this. If you work or consult for a pharmaceutical company, sometimes FIRS may just come up with arbitrary VAT demand notice or assessment. But the moment you notice that what your client does, and you can defend that they are into sales of pharmaceutical product, it is not, it is VAT exempt. Then basic food supplies. There's a lot of argument around this, what actually constitutes basic food supplies. But the basic food supplies are all food supplies as contained in the Finance Act 2020 and that of the 2019. Examples of these are bread, milk, gari, and every other raw food items in their raw forms. But if you are consulting for a company, say Sheraton Hotel, right? Food sold to them, by them in that industry, does not qualify as basic food supplies. So we need to be very careful because certain values has already been added, right? So medical services are also exempt. So hospitals are not expected, when you patronize their service, they are not expected to charge VAT on the service they have rendered to you. Baby products also qualifies as one. Books and educational materials also qualify as exempt goods and services as contained in the Act. Other exemptions given via FRS circular or letters include import of petroleum products. Without the VAT, we are even crying that, oh, petroleum products are too expensive. Imagine if VAT is now added. Residential property are also VAT exempt. Then water in their raw form are also VAT exempt. But I want to put a question to the House. Sales of land and building, does it qualify as VAT exempt or is liable to VAT? Can I have your view on the chat room? Sales of land and building, does it qualify as VAT exempt or liable to VAT? Okay, Balanle is of the view that it is an immovable, hence it is not liable. Please, I need you to make reference to the Finance Act of 2020. It is not all immovable items that qualifies as VAT exempt, but the Act the Act actually specifically states that immovable item, excluding land and building, should not be VATable, right? So when you consult for entities that sells lands and building, it is not expected that they will charge VAT. But on the contrary, if you now dispose of any fixed assets other than land and building, will it be VATable? Other fixed assets, disposal of other fixed assets other than land and building, will it be VATable? Yes or no? Okay, Grace says it's yes. What is the view of others? Chukudi says no. Chukudi, please, can you unmute your mic and tell us why it is no?
Okay, good evening, everyone.
Good evening.
From my own view, you said sale of other fixed assets, right? Hello.
Exactly.
So I'm looking at it that it will fall under capital gain tax.
Capital gain tax. Oh, it's a different thing entirely. Okay, let me explain that clearer for the purpose of every other person that still have that notion. The truth of it is that any disposal of fixed assets other than land and building is actually VATable, right? And the concept of capital gain tax is a different thing entirely. Capital gain tax only occur, maybe our next topic will be looking at capital gain tax. Capital gain tax in its context actually accrues when you have a capital gain on a disposal of qualifying asset, right? What that then means is this. Let's put an illustration to this. Let's assume I bought a set of laptop for 400,000 naira and I sold it for any reason. My purpose of acquiring that laptop is to be used as a fixed asset to me. If I now sell it at any value above 400,000, the difference between the proceeds and the cost of what I've sold is capital gain. So you might make a disposal of fixed assets that will be VATable and still accrues, CGT. But you can also make a disposal that will be VATable and that will not accrue VAT, CGT. Let me explain that again. Let's use the same example that we have earlier used. I bought a laptop for 400,000 naira and now decide to sell it at, say, 350. Selling it at 350, if you compare my costs with the disposal proceeds, there is no chargeable gain there, right? So CGT will not come to play at all. But I have disposed an asset which is not specifically exempt or zero rated, I have to calculate or estimate VAT on that disposal proceeds. I believe that is clear. Chukudi, I believe you get that. Please confirm if you understand. Okay, good. So I believe everyone also understands that. So let's quickly go on because of time. So we've been able to establish what exempt goods and services are. Then what is reverse VAT? What is reverse VAT? What is reverse VAT? This is a common terminology that a lot of people in practice often misunderstood. There are instances whereby everybody assumes that VAT always accrues on proceeds, right? Sometimes VAT may also accrue on the cost you have incurred, right? And I will give an illustration. As contained in section 10, it provides that anytime you transact a business with a non-resident entity, right? If you transact a business with a non-resident entity, this time you are not selling to them. If you are selling to them, to a non-resident entity, or rendering a service to them, it is an exported service. We have earlier said that any form of exported service are VAT exempt. But when a non-resident entity is rendering a service to you, it is an imported service. Now, that imported service, because of the consumption principle that we earlier explained, VAT will accrue on that service. The intention of the law is that if that service has been rendered to you by another company in Nigeria, that company will have ordinarily raised or charged VAT. So it should not be treated in a different way when you are the entity rendering the service to you is not resident in Nigeria. Even if that non-resident entity did not charge VAT on the invoice to you, you should then self-charge yourself and now remit that VAT to the FRS on behalf of the non-resident entity. So when you are doing that, we call that reverse VAT. So reverse VAT usually accrues on the cost of chargeable goods and services. It usually accrues on the cost of chargeable goods and services. If you go to section 13 again, this section 13 also provides instance where VAT can still accrue on transaction within the country. It provides that anytime you transact a business or you have a contract and you are rendering that service to any of the government parastatal, whether government ministry, any of the statutory bodies, or any of their agency, whether at the federal level, at the state level, or at the local government level, it is expected that when you are raising your invoice on these entities, you should charge VAT. But when they want to pay you, they will pay you less VAT, because section 13 specifically provides that any of the government agency, when rendering service to them is not VAT exempt, but they should withhold that VAT and remit on your behalf. So when any of these agencies now want to file the VAT, they will file the VAT as a reverse VAT because it is a VAT on their own costs. Another scenario, as explained in section 13 also, is instances when you are rendering a service to oil and gas entities. What are oil and gas entities? Oil and gas entity is not necessarily those who are rendering oil and gas support services, but every entity that are subject to tax under PPTA, Petroleum Profit Tax Act. So whenever you render service to these people, even though your service to them is not VAT exempt, but they are expected to withhold the VAT and pay you for the value of the service you have rendered less the VAT. But whenever they now want to file the VAT, it will be filed as a reverse VAT. Okay, so somebody asked a question here. Olawale says, how do I file reverse VAT? Exactly. This in a similar way, if you look at your VAT form, right, there is a particular section there that relates to disclosure of your income, right? ordinarily, VAT will always accrue on your income, but given the specific provision of Section 10 and Section 13 that expects, or that I allocate certain responsibility to entities transacting business with non-resident entities or government parastatals, as well as oil and gas company. Whenever they withhold this VAT, on the VAT tax, on the VAT form, there is a section there that talks about your costs. So you will indicate the cost of the service that they are, those other entities has rendered to you. You will remit it the same way, but you are making the disclosure under the cost section, not under the income section, right? So that is how you do it. And when you provide the cost there, you apply the substantive VAT rate. After you must have remitted, then you file with the relevant tax authority. Please note, prior to this moment, VAT forms or returns are usually filed physically at various tax authority with various tax authority. But now you are doing it virtually. I expect that professionals amongst us that render consulting services will have also updated their the tax record of their clients on the FRS platform, such that they will be able to have access to the e-portal, right? But if you have not done that, certain tax offices still allows you to file physically, but most of the tax offices now expect that you will file it electronically. So that is how you have to do it. Calculate all the VATs that accrues to you as a reverse VAT on your cost, make the rendition. But please note, it is important we stress this. You know, when you want to file your output VAT, you are using your tax identification number to file the VAT. But when you are filing the reverse VAT, you are not using your tax identification number to filing it. You are only filing it on behalf of the primary person that ought to have charged the VAT, but which the law does not allow to remit it. Do you understand? So in the first instance, when you have transacted business with a non-resident entity, you need to ask the non-resident entity, you need to ask from them their tax identification number. If they don't have the tax identification number as at that time, you can process the tax identification number for them on your own, with your own address, but it will bear their name. But if it is with respect to transactions or entity that transacted business with government parastatals or oil and gas, of course, such entity within Nigeria will have had their tax identification number. So their tax identification number will be used in filing this reverse VAT. Bolale, I didn't get your question very well. You said, on what basis will this apply to multinational? Okay, if I understand you very right, what I expect, what I assume I understand from what you are asking is that multinationals that does not have a fixed base in Nigeria will be regarded as non-resident entity. If it's a multinational that has a fixed base in Nigeria, right? Ordinarily, when they are raising their invoice on vatable service or vatable goods, they will charge, collect, and file as output VAT, except when they render service to oil and gas or any of the government parastatal or agencies. But if it is a multinational that does not have a fixed base in Nigeria, say for example, Amazon, Google, Facebook, where you cannot establish that they have a fixed base in Nigeria, then on the invoice that they have raised on you, You will self-charge yourself if the VAT has not been indicated on the invoice, and you have to file it with the FIRS as a reverse VAT. Please confirm if that answers your question. Does that answer your question? Bolani, can you unmute your mic and let us understand what your question is in specific terms?
Good evening. Okay, what I'm trying to say is that the multinationals, when companies render services to them or they sell goods to them, so instead of they paying inclusive of VAT, I heard they withhold the VAT and remit themselves. So I'm trying to get a proper understanding as regards that.
Okay, so to clear that very well, as contained in the relevant section of the Tax Act, I've made clarification on this. We make reference to section 10 and section 13 that talks extensively about instances or issues that will result to reverse VAT. Multinational other than oil and gas don't have a right or any right to withhold VAT. But if that multinational is an oil and gas company that is subject to tax under the PPTA, right? Whenever you render service to them or you make supplies to them, the law allows them to withhold or withheld the VAT and now remit as a reverse VAT. In that month, they'll be filing two different VAT returns. One will be on their costs, the cost they have incurred in respect of services that other entities has rendered to them that are VATable. So they will file that as a reverse VAT. Then the second will now be a certain portion of their incomes that is also liable to output VAT. They will also have to file that as an output VAT. So meaning that entities of that nature will have two different returns to file. One in respect of the cost, which we call the reverse VAT. The other one in respect of the VATable income, which we call the output VAT. Does that answer your question? Okay. So I've explained this earlier on. According to section 13 of the Value Added Tax Act, as amended, VAT due on contract of supplies of goods and services to an oil and gas company, ministries, that is government ministries, statutory bodies, and other agencies of the government at federal, state, and local levels are to withhold the VAT due on the contract and remit to the FIRS as a reverse VAT. Then what then is our rate of tax or VAT in this context? With special attention to the Finance Act, which first of all became effective in February 2020, before then, our substantive VAT rate as contained in section 4 of the Value Added Tax Act was But with Finance Act of 2019, which on February 20, the VAT rate has now been amended to 7.5%. I believe that is understood. But there is a caveat there. The Finance Act also further provides that though VAT rate has now been increased from 5% to 7.5%, but certain entities whose annual income before the commencement date of that Act, Finance Act of 2019, is less than 25 million, they are not expected to file, to charge VAT, not expected to file VAT. So who then bears the VAT? Does it mean that that specific line of their services of goods that ordinarily will have been vatable, does it mean that it's now exempt? No, it's not exempt. It will only become exempt if an entity having a turnover of less than 25 million is rendering a service that is vatable to another entity that is also having a turnover of less than 25 million. Under that instance, that transaction will then be VAT exempt, right? But if a small entity, which is an entity having a turnover of less than 25 million, renders service to any other entity, which already have turnover above 25 million, that benefiting entity will now be expected to self-charge itself and still file the VAT as a reverse VAT. I believe that is understood. So that is what I meant by also important to note that as contained in section 38 of the Finance Act 2019, business with turnover of less than 25 million are not expected to include VAT in its invoice, but the entity with whom it transacts business, provided it is not a small company, is expected to self-charge the VAT, remit and file the VAT on the cost of goods and or services as a reverse VAT. Oh, Grace asks that, can you offset your output VAT against a reverse VAT? You can only offset your reverse VAT if it qualifies as input VAT as explained in section 17. Section 17 puts more clarity on what are the types of input VAT that can be offset against the output VAT. And I will clear that. They appear under 3 scenarios. The first scenario is that if your input VAT is on your fixed assets, the law provides that you should capitalize it and claim the relief on that cost as part of your capital allowance. So in that instance, you cannot offset it. Even if you are selling the PPE in future, you cannot offset it. What the law allows you is that capitalize and claim the relief as part of your capital allowance. The second scenario is if the input VAT you are talking about is already on overheads. Overheads like the services that are rendered to you by your accountants, by your lawyers, the cost you incur on repairs and the likes and the likes. The moment that input VAT is on overheads or administrative expenses, it cannot be offset against the output VAT. The third scenario then is if the input VAT that you have incurred is incurred on goods you have purchased with the intent of selling them, not as your fixed assets, but with the intent of selling them, then you can claim it as what? Input VAT. The second scenario is if that input VAT is incurred as part of your raw materials used in the course of manufacturing, you can also claim the input VAT against your output VAT. Then the last one is if you have suffered input VAT on imported goods that you want to sell, you can then offset it against the output VAT. But if any of these input VAT you have incurred is on any services, rather than goods you have purchased with the intent of selling, you cannot offset it against output VAT. A typical example of that is that I run an audit firm. If I incurred any input VAT, because the nature of my activity is service oriented, even though I may incur input VAT on any source, the law as contained in section 17 of that act does not permit me to claim it against my output VAT. Grace, I believe that answers your question. So as contained in section 17 of the VAT Act 2007 as amended, input VAT can be recovered in the following circumstance. That's further buttress what I explained earlier on. Only when there is a VAT on goods purchased or imported directly for resale, you can offset it against the output VAT. VAT on goods that forms your stock in trade used for direct production of any new product, you can also offset it. You can make reference to that as contained in section 17. But you need to note, service companies cannot recover any VAT with the exception of telecoms. It's only telecoms company that has the opportunity to also claim input VAT. Any other service-oriented entity are not permitted to claim input VAT on their outputs. I believe that answers your question. Okay, so the next one is still on the recoverable of input VAT. To be able to recover your input VAT, a taxpayer must show evidence that you actually incurred that input VAT. So it is not just claimable in the vacuum. There must be an evidence that you have actually incurred that input VAT. And such evidence must be as contained in your tax invoice on your purchases or VAT incurred at the point of clearing your imported goods as contained in the custom documents, then evidence of payment of the VAT, that is the input VAT. You must provide these evidences before you can actually claim it against the output VAT. Input VAT is basically on direct cost or cost of services. Any other input VAT that you have incurred on administrative expenses, overheads, PPE does not qualify for claim against the output VAT. So this further provides what I've explained earlier on. What is the tax treatment of input VAT incurred on overhead? I believe you can all answer this question now. We have earlier explaining that it has to be what? Expense. You cannot claim it on the overhead, and the same thing, you cannot claim it on the fixed assets. So collection and accounting for VAT. How then do we collect and how then do we account for for VAT? Whether an input VAT or an output VAT. Whenever you incur input VAT on the goods you want to resell, the accounting entry is very detailed. What you then need to do is you have to debit your VAT accounts with the total value of the input VAT you have incurred and credit your bank with the value of the input VAT you have paid. When you then sell the goods, you will debit the bank because you have actually collected alongside with your sales proceeds, the output VAT, and credit the VAT account with the value of the output VAT. It will then give you a difference. It is expected that your output VAT should be higher, that is your credit side of the VAT account should be higher than the debit side of the VAT account, which then represents what you will then remit to the government at the end of every month. But upon rendition, when you are now remitting the VAT, how then do you now pass the accounting entry? The difference between the debit side of the VAT account and the credit side of the VAT account, which is the output against the input, then represents what you will claim, what you will remit to the government at the end of the day. But if it then happens that your output is more than your input, you need to justify it before you can claim credit of it, right? So, but when you are remitting the excess of output VAT on the input VAT, you will debit your VAT account and credit your bank with the difference on your VAT ledger. I believe that answer, that is well explained. Now, for every organization that is in business, they don't just have an automatic right to charge VAT. There is a precondition you must fulfill before you start charging VAT. One of those conditions is that you must be registered. You must be registered as a VAT agent or tax agent of the government. So prior to, February 2020, a taxable person is expected within 6 months of the commencement of business or commencement of this act, that is the VAT Act, whichever one that is earlier, to register with the appropriate tax authority for the purpose of VAT. Now, without that registration, you are not expected to start charging the VAT. So, but with effect from February 2020, a taxable person is now expected to register for tax purpose upon commencement of business. So I need you to compare this, what was the situation before 2020 and what is the situation after February 2020. Before 2020, you have the option to get registered within 6 months of commencement of business, right? But as far as the Finance Act 2019 is concerned, the law expects you to register immediately. You don't have to wait till 6 months again. Immediately, upon commencement of business, you have the obligation to get registered. If you don't do this, then there is penalty that you may have to incur. What is the penalty for failure to register for VAT? Do anybody have the answer to that? What is the penalty? Before the advent of 2020 and at the advent of 2020, what is the penalty for non-registration for VAT? Who has response to that? Any response? Okay, Carlos says before 2020, it is 5,000 naira. Yes, correct. Adeni says before 2020, it was 25,000 in the first month of default and 5,000 subsequently. Okay. What's your any other view? What happens after 2020, after February 2020? Okay, so let me answer that. With effect from February 2020, it is in the first month of failure, it is 50,000 for default. Every other month that the default continues, it then accrues 25,000. Please take note. After 2020, it is 50,000 in the first month. Subsequently, it is now 25,000. Somebody was asking whether the registration is upon incorporation or upon commencement of business. It is upon commencement of business, right? For VAT purpose, it is upon commencement of business. Before now, you are expected to register within 6 months upon commencement of business. But with effect from February 2020, you are expected to register not within 6 months, but immediately you commence business. So there is also, we've been talking about VAT all the while. It is expected that for every tax agent that charges VAT, you must always produce what we call the tax invoice. The tax invoice is not different from your regular invoice. What they're just saying is that okay, somebody asked a question that what happens if I do not commence in 2 years? What the law says is you have the option, you can choose to you can choose to register upon commencement of business. You can upon incorporation. But if you have not commenced business even 2 years after the registration or incorporation, there is no accruing penalty, because the wording of the Act is that upon commencement of business, you are to register. Before, in the Proud Act, it was the earlier of within 6 months of commencement of business or within 6 months of the commencement of these VAT acts. So please try as much as possible to take note of the differences between these two. The tax invoice is not different from your regular invoice that you issue when you render services to your client or you supply goods. But you must make sure that your regular invoice provides the following information. It must have the taxpayer identification number. It must contain the name and address of the supplier. It must contain the date of the supplies, the name of the purchaser or the client, the gross amount of the transaction, then the VAT rate that is substantive, whether it is before February 2020, where you will then charge 5%, or after February 2020, when you then charge 7.5%. But in the case of zero-rated goods, the VAT rate will then be 0%. And in the case of exempt, the VAT will then be nil. So tax invoice, just as earlier explained, that tax invoice is different. Okay, this is a question. Tax invoice is different from the regular invoice issued to contracting parties on supplies of goods or services. Is it true or false? Is it true or false? Yes, it's false, because it is not different from the regular invoices that you issue. Special requirement to withhold VAT. We've talked about this before too. So let's try to test this, whether we can still remember what we have explained thus far. VAT withheld on cost of supplies of goods or services is remitted or filed as dash. Who has the answer to this? VAT withheld on cost of supplies of goods or services is remitted and filed as dash. What is the answer? Reverse VAT, reverse VAT. Awesome. It shows you are following. That's very good. That's very good. So let's go on. So the following companies and bodies are required to withhold VAT charge on their purchases and remit directly to the FRS. This is just to buttress what I've explained earlier. We earlier mentioned that any of these entities can withhold VAT even though you are raising the invoice on them. Ministries, statutory bodies, and other government agencies, oil and gas companies, companies operating in the oil and gas sector. Nigerian companies are also required to withhold and remit VAT charged by non-resident entities. Okay. Then very important, we are gradually coming to the end. But before then, let's look at this. What are the various offenses as contained in the relevant section of the tax law? And what are the penalties melt out for those offenses? Number one, when you furnish the tax authority with false documents or false information, right? The penalty is as contained in section 25 of the Value Added Tax Act. And the penalty as contained in that section is that you will then be expected to pay twice the amount that you have under-declared. Let's assume the VAT you ought to declare is 100,000, and you have provided a false document that makes you not to pay any VAT at all. When you are caught up with, you will then be expected to pay twice the amount, which is now 200,000. Evasion of tax. When you use false means or give false impression to evade tax, what is the penalty? It is as contained in section 26B. It provides that you have to pay 30,000 or 2 times the amount of the tax being evaded, whichever is greater or higher, or imprisonment for a term not exceeding 3 years. When you fail to make attributions, attribution means when you ought to make certain representations and you did not do it. You need to make certain disclosure and you did not do it. The penalty is as contained in section 27B of the Value Added Tax Act as amended, and the penalty is 5,000 naira. When you fail to notify the tax authority of your change of address within 1 month of such change, the old law only provides a penalty of 5,000. This is as contained in section 28 of the Act. But with effect from 2020, as contained in the 2019 Finance Act, failure to notify the relevant tax authority of your change of business address within 30 days will attract a penalty of 50,000 in the first month of failure and 25,000 in subsequent months the failure continues. That is contained in section 24, section 42 of the Finance Act. Then the next one is failure to issue tax invoice. So the penalty is as contained in section 29, and it is 50% of the cost of the goods or services for which the invoice was not issued, in addition to the value that you are expected to pay. The resisting an authorized officer. When any tax authority comes or officials comes to your office and you don't allow them to do their work for the purpose of this act, the penalty is as contained in section 30D, and it is 10,000 or imprisonment for a term of 6 months, or both such fine and what? Imprisonment. You can be expected to pay the 10,000 and still go for imprisonment for a term of 6 months. When you have issuing of tax invoice by unauthorized person, that is, you have not been registered, you are not expected to be a collector of such tax, and you have been collecting. The penalty is you have to make a refund of all that you have collected. In addition to that, 10,000 naira or imprisonment for a term of 6 months. These are contained in section 31B. Then failure to register. The old law provides a penalty of a fine of 5,000, but in the new act, it is 50,000 in the first month, 25,000 in the subsequent month. Failure to keep proper records and accounts, it is as contained in section 33. The penalty is 2,000 for every month in which the failure continues. Failure to collect the tax, 150% of the amount not collected plus 5% interest above the commercial CBN rate. That is as contained in section 34. Then failure to submit tax returns. If you don't submit tax returns, the old law provides that you will be levied what? 5,000 for every month in which the failure continues. That is as contained in section 35. When you are aiding and abetting commission of an offense under VAT Act, it is 50,000 or imprisonment for a time of 5 years, as contained in section 36. Then conduct which constitutes commission or omission of to commit an offense under the VAT Act, it is 10,000 naira or 4 times the amount of any tax that was intended to be evaded by the conduct, whichever one that is higher, or an imprisonment of a term not exceeding 6 months. Then we are here to now address this question. I will need your response to this. John purchased a television set from Cape Limited. Cape Limited is a retail outlet for 200,000 naira, which is VAT inclusive. Supposing that the TV cost Cape Limited 185,000 naira, which is also VAT inclusive at the rate of 7.5%. Calculate the input VAT, the output VAT, and the VAT to be remitted to FIRS by Cape Limited. Who can provide the answer? Number one, what is the input VAT? How do you calculate the input VAT on the 185,000? The input VAT will be calculated by multiplying 185,000 times 7.5 divided by 107.5. That will give you your input VAT. The output VAT will then be 200,000 times 7.5 divided by 107.5, right? Then the VAT deemed to be remitted will then be the difference between the output VAT and the input VAT. We can give us the value. We can quickly calculate this and confirm the value. What is the input VAT, output VAT, and the VAT due for rendition? Any response? Any response? Who can help us to calculate the input VAT? What is the value of the input VAT? Can you all hear me, please? Please, if you can hear me, indicate I on the chat room. Michael, what is the value of that? Is that input or output? Okay, the input is 12,906. Okay, correct. What then is the output? Output is 13,953.48. Good. Good. So what then is our VAT? What then is the amount of VAT to be remitted? All right, correct. Correct. 1,046 naira 51 kobo. So this is exactly how please, you need to note the difference. You need to know the difference when they say VAT inclusive and VAT exclusive. Can we take the scenario as though the question says VAT exclusive? If it is VAT exclusive, what will be the input VAT and what will be the output VAT? And how much will be remittable? If it is VAT exclusive, if it's VAT exclusive, can somebody give us the output VAT? Okay, Michael is of the view that input VAT will be 13,875. Output is 15,000. Amount to be remitted will then be what? Okay, so that's correct. I believe everybody understand that. So this is then the amount that the company will have to pay. Cape Limited will have to remit to the FIRS. Please, you must try as much as possible to ensure that you understand this. If you don't understand, ask question before we go on. We'll be looking at another example. So let's look at this example again. below were extracted from the financial statements of ABC Micro. Samuel, please, can you unmute your mic and ask your question? I need to understand what you want me to explain. Samuel, please, can you unmute your mic and quickly ask your question? Otherwise, I will go on. Samuel, ask your question again. I don't get you. What do you want me to explain? Okay. Okay, to go over the teaser again, the first one. Okay, now listen very well. We have the VAT on our purchase to be 185,000. And the question says it is VAT inclusive. When it is VAT inclusive, it then means that VAT is already included in the 185,000. So to calculate the input VAT, you will say 185,000 times 7.5 divided by 107.5. But if it is VAT exclusive, you will say 185,000 times 7.5 over 100. Same thing with the output VAT. The output VAT, the proceed is 200,000. If it is VAT inclusive, you will multiply by 7.5 divided by 107.5, right? But if it is exclusive, you will multiply 200,000 times 7.5 divided by 100. Make sure you understand the difference in the ratio when you are multiplying it. If it is inclusive, it means VAT is already included. So you are multiplying by 7.5 divided by 107.5. All right, so let's quickly look at this next one again. Below were extracted from the financial statement of ABC Microfinance Bank. You are required to calculate the output VAT. You are required to calculate the output VAT. Please, whenever you have a question like this, try as much as possible to understand which of the sector the taxpayer actually belongs to. Part 2 of the first schedule of the Value Added Tax Act actually exempt microfinance bank, community bank from VAT on incomes from their primary line of business. It exempts them from VAT on incomes accruing on their primary line of business, right? So if you were to calculate VAT on this, output VAT does not accrue at all because it is a microfinance bank. So we look at the items one after the other. Interest income. Anything interest is not vatable because it does not qualify as a supply of goods or services. So whether to a microfinance bank or other commercial bank or any other entity, interest income is not vatable. Interest expense is also not vatable. Commission charge, provided it is accruing from the microfinance bank line of business, it is not vatable. But if it were to be a commercial bank, you will calculate VAT on it. Management and advisory fee for a microfinance bank is not VATable. But if it's for any other line of business, it is VATable. Dividend received is never VATable, doesn't qualify as a supply of goods and services. Then operating lease income. Operating lease income will be VATable because it is accruing not from the primary line of business of the microfinance bank. So on the 810,025, you will have to calculate VAT on this. Provision of doubtful debt is not a VATable expense. Operating expense, provided that this operating expense are not expense incurred in respect of imported service, it will then not be VATable, right? Proceeds from disposal of old motor vehicle. Can you confirm, is this VATable or not? Who can help us to answer? Is it VATable or not? Exactly, it is VATable because it is an income accruing from a line of business other than their primary line of business. Then what about purchase of fixed assets? Which VAT will have accrued on this? What type of VAT will have accrued on this? Input VAT, correct, input VAT. How will this VAT be treated? How will it be treated? To confirm you understand what we have explained thus far. Correct, capitalize and expense, and claim as, what do you call it? Capital allowance, that's very correct. So let's look at this again. So let's look at this before we call it up. Below are extracts from the financial statements of Audit trading stock for the period ending March 2021. You have sales of finished goods, 5.7 million, VAT exclusive. Purchase of goods for resale, 3 million, VAT inclusive. Purchase of new computers, 185,000, VAT inclusive. Payment for office consumables, 202,000, VAT inclusive. Opening stock of finished goods brought forward, 720,000, VAT inclusive. Closing stock of finished goods carried forward, 910,000, VAT inclusive. The paid audit fee, 1.260, VAT inclusive. You are required to calculate the input VAT, output VAT, and amounts due for remittance to the FIRS. So we can tell us what the VAT, input VAT will be. What would be the value of the input VAT? First of all, you need to identify what are the items that qualifies as input VAT, right? They will have incurred input VAT on the opening stock of finished goods. So you need to calculate input VAT on that. And it is 720 times 7.5 divided by 107.5 because it is inclusive. You will calculate input VAT on the purchases of goods for resale. That is also 3 million times 7.5 divided by 107.5. Then you will calculate input VAT also on the closing stock of finished goods, but this one you will have to deduct it from the addition of opening stock of finished goods plus the purchase of goods for resale. So you are adding input VAT on the opening, input VAT on the purchase, less input VAT on the closing, right? Then the sales, you calculate the input VAT, output VAT on the sales. That will give you the value of the output VAT. But if you are calculating this, since it is VAT exclusive, you will be multiplying by 7.5 divided by 100. VAT incurred on the audit fee will be expense. You don't need to bother yourself about that. VAT incurred on office consumables will be expense. You don't need to bother yourself about that. VAT incurred on purchase of new computer will be capitalized. You don't need to bother yourself about that. So output VAT will only accrued on sales of finished goods, while input VAT will be the input on opening plus the input on purchase, less the input on finished goods. So that's where we're going to call it a day today. Any question? Any question? Okay, Adenike is asking if we can explain the VAT on interest income again. My explanation to it is that interest income does not qualify as supply of service or goods, so it is not VATable. It's a passive income. There is no value adding services rendered, so it is not VATable. Anywhere you see interest income, it will not be VATed. Yes, the recording section of this section will be available on our YouTube page. Please, after this section, follow us on our YouTube page. You will get it there. Adenike, the video will be available on our YouTube page immediately after this section, so you can check it there. And you can also check our linking page too. We share it on our linking page too, whichever one you prefer, either the YouTube or the linking. Okay, so VAT must be filed not later than the 21st day of the following month of the transaction. So say for example, VAT in respect of April must have been filed not later than Friday, which is the 21st day of of May. Any other question? Yeah, Kalu, you are raising your hand. Ask your question, please. Adenike, VAT is chargeable on commission, yes, because the commission accrues from an active service, value-adding service is a VATable income. Commission is a VATable income. Grace, please ask your question again. I'm sorry. Oh, what was your question, please, Grace?
Sorry. Hello?
Yes.
Thank you very much, sir. Please, I have a question regarding pharmaceutical companies, that is entities who are into pharmaceutical line of business. We were meant to understand that. Yes, can you hear me? Yes?
Hold on first. Grace, you can unmute your mic immediately. Carl, finish his question, and after I've answered him. So go ahead.
Okay, thank you very much. So now, for instance, if we have a pharmaceutical entity who are actually exempted from paying and charging of VAT, does it mean that they are not going to be penalized if they fail to file their monthly VAT returns, since they are not expected to pay or charge VAT?
Okay, charging of VAT is different from filing of VAT. The exemption that was given was not for filing, it was for not charging, exempt, right? So where they fail to file, the penalty will be accruable on them. So every month they need to file nil returns.
Okay.
So all the categories of entities that are exempted from charging, they don't have the same exemption from filing. So every month you need to still disclose to the FIRS, because that is the only major way they can continue to keep track of every entity and know why some people are filing and are charging while others are not charging.
It's okay. Thank you very much.
Grace, can you ask your question now? Mute your mic.
Yeah, good evening, Mr. Kunle.
Good evening, ma.
Please, I asked my question since and you didn't answer. Let me just, I hope I still remember the question. The question was on that reverse VAT. You understand? I asking if it is possible for an entity to offset its output VAT against the input, against the reverse VAT. Let me say you have a reverse VAT to pay, and you also have an output VAT to remit. Is it possible for you to use the input VAT, which is due on, which is a reversal VAT, to offset that of your output? That's one question. First, I'll ask another one. Can you help me explain this first?
Okay, so let me answer that. If the input VAT, that reverse VAT, accrues on imported goods that you want to resell, of course, you can claim it as input against the outputs. But if it accrues on the services or purchase of fixed assets, it does not qualify for claim against the outputs. Does that answer your question now?
Okay, yes, it does. And then secondly, this is my first time of hearing about this reverse VAT. And how practical it is, because I see it as something that, let's say I'm the entity who is to make this remittance. And here's a situation where the non-resident entity is not based in Nigeria and they don't have a fixed base of business. And I'm expected to still remove the money in my pocket to go and pay. How do I get the information to generate their TIN number? Do I need to request for their registration number and all that? That's their certificate of incorporation to generate the TIN number that I will use to do this remittance. And then if I do this remittance, how would they also, do I need to send back the evidence of payment? You know, how, I don't see the practicality of this particular reversal VAT. And is it punishable if I fail to do that?
Okay, the provision of the act is actually very explicit, right? I'll give you the practical answer to this. When you have transaction with a non-resident entity, some of this non-resident entity already has tax identification number. A typical example of it is Amazon. Amazon has a tax identification number. I was privileged to even identify that in one of my advice to one of my clients last week when they shared the invoice with me. I saw their tax identification number there. So where you can lay your hand on their tax identification number, you will then use that number to file the reverse VAT for them. What happens if the client, the non-resident entity, does not have a tax identification number? If you go through Section 10 of the Value Added Tax Act provides a perfect answer to this. And it says that the party with which the non-resident entity is having a business with should then approach the FIRS. And the non-resident tax office of the FIRS and provide the name of that non-resident entity. But you will then use your own address. The only thing that we ask you to provide is that you will have to provide the certificate of incorporation. You will ask the non-resident entity to share their certificate of incorporation with you in their own country, right? With that certificate of incorporation, you will fill the tax form, right? You fill the VAT registration form and provide your own address. And why I say you should always confirm from the non-residents if they have the tax identification number is that it's possible you are not the only one, or your client is not the only one that they have been rendering service to. So it's possible one of the other beneficiary of their service has also registered them. Do you understand? So you need to confirm, but if they confirm that, oh, they have never been registered, you have an obligation. You have an obligation to register them using your own address, but their own certificate of incorporation. Then to answer the last question, whether you could be punished if you don't charge. Yes, you will be punished if you don't charge, because that means that you have been negligent of your responsibility. Section 10 actually spelled it out that when a resident entity, a local entity, enjoy an imported goods or transacts with a non-resident entity and enjoy an imported service, it is purely a VATable transaction. So the fact that you did not charge this does not exempt you from your obligation. Please remember the caption in this our training is Value Added Tax Act, Planning, Compliance, and Audits. You cannot plan for anything you don't have a good understanding of. That is why we have taken our time to explain cogent areas of the value-added tax administration in Nigeria. So the first point of call to having a very effective tax planning, VAT tax planning, is you must have a good understanding of the Value-Added Tax Act. Do you understand? Two, yes. You must also understand the operation, the industry where your client operates, of their business with various clauses, exemptions as contained in the tax law, right? Then you need to also advise your clients that they must structure their invoicing very well. A typical example of this: somebody rendered a service to you, want to come and let's say you want to make a supply of AC. You are the one that wants to make the supply of AC. Now, remember, if the cost of each of the AC, you have to supply 10. If the cost of the AC is 100,000, and your service charge is 20,000 per one times 10, right? And your 20,000 times 10. It will be wrong. That in total will give you 1.1 if I'm right. It will be wrong for you to just say the value of your service is the total. It is very advisable for you to separate the cost of what you are supplying from your service charge, because your service charge is the real value you are adding. If you just express all the value as a single figure, VAT will be applied on everything. Do you understand? So it is advisable that you separate the value of your supplies from your service charge, because the VAT, output VAT, should only accrue on your service charge. So, but I'm open to any other question you might have, even outside this particular training. Quite a number of you already have my phone number, but I can provide you with it again. You can always reach me on 090-244-00652. That is also my WhatsApp line. Should you have any challenge in the course of putting up an effective VAT planning for your client or your business, we are open to being of service to you. Should you require more personal training on any topical issue in tax, accounting, standard, or audits, we are very much open to be of service to you. Then, should you be having any challenge on any engagement you're already on with your client, we can also partner with you to ensuring that your clients enjoy the best service. Feel free to reach me on that number, and my email address is acol@kcp.com.ng, and our office address is at number 12 Lanre Awolokun Street, Gbagada Phase 2. So that's where we're going to call it a day today. For our YouTube channel, just check KCP. KCP, you will see our YouTube channel. Our LinkedIn is Kunle Cole and Partners. That is the full meaning of the KCP. We will also send you a detailed mail that will show, that will give you that will give you a link to how to get in all of these video materials and the hard copy materials done. Any other question, please, before we call it off? Any other question? So in the absence of any question, I sincerely want to appreciate your time. God bless you. I wish you all the best, and I wish you a very fruitful week. Please continue to follow us on our various social media handles. We will communicate with you when our next training will be. You are also free to either mail us or send us a WhatsApp message on any other preferred topic you might want us to do a public training on. We'll be glad to do that. Thank you so much and enjoy the rest of the night.